President Trump says there can be a slowing of the economy if the Federal Reserve does not lower interest rates. In a Truth Social post, the president called the Federal Reserve Chair Jerome Powell, quote, Mr. Too Late and a, quote, major loser. CBS News MoneyWatch correspondent Kelly O'Grady joins me now in Studio 55. So, Kelly, with the markets already unsteady, traders and investors worried about the future, is this really the right time for the president to be calling the Fed chair a loser and threatening to remove him, which we've never really seen before? The Federal Reserve Chair is supposed to be sort of apolitical.
So I think if you talk to investors, they would say this is not the right time. Now, we have seen the White House in past try to make comments that they didn't love what the Fed chair was doing, but in terms of an outright removal, no. Now, I think before this comment yesterday, a lot of investors were thinking, this is just noise. We've seen the president do this before. But the fact that this has continued to escalate, a lot of investors I'm talking to are saying that there is a fear now that you could see the president try to take legal action. Now, for context, there is no legal precedent to remove the Fed chair without cause. But that doesn't mean that the president couldn't try to undermine and sort of just any hint of this, sort of back and forth between these two institutions that are supposed to be separate. Yeah, you're likely going to see a lot more uncertainty. And the IMF, the International Monetary Fund, came out with their report today. And I want to read you one line that they said was important to stability. They said, quote, monetary policy credibility will be important in all cases, and central bank independence remains a cornerstone. So basically what they are saying is, in order for there to be growth, in order for there to be stability, these central banks need to be remaining independent. And I do think that that was referencing what's happening here in the U.S.
And so if the president were to fire or remove the Fed chair, I mean, the results could be cataclysmic. We're already seeing what's, I think, fascinating is generally when you impose tariffs, the dollar gets stronger. But for the first time, I mean, I'm not that old, but it feels like I've never seen anything where you're seeing tariffs being implemented and the dollars are getting weaker.
I know, this is the thing, right? You saw the big sell-off in the stock market yesterday, and this has sort of followed weeks of there being a trickle, if you will, out, sometimes a very fast trickle. Normally, you would see that money go into the dollar, or you would see it go into the bond market, which are traditional safe havens for investors, because investors think that the U.S. economy is going to be strong, that the government's always going to pay its debts. The fact that you are not seeing that, in fact, you're also seeing a flight from these safe U.S. assets to something like a gold, does underscore that there is just this concern about what is happening with our economy, with our markets, and with our policy.
Yeah, essentially it tells me that the U.S., in terms of the way you think about the market, the rest of the world is bearish on the United States. They're selling the United States as opposed to buying. The other big news is that the president met with some CEOs of major retailers. What's the feedback that they're giving the White House? I got to believe at some point when these CEOs and these tech CEOs start to really put the screws to the White House, we may see the president pull back on some of this.
I think that's what a lot of people are hoping. A lot of companies are hoping. The sort of official readout from the meeting was pretty, I would say, tame amongst the three, or sort of the retailers that were there. They basically said this was a great meeting. We're looking forward to focusing on the U.S. consumer. But if you think about these companies, Walmart, Home Depot, Home Depot particularly, when you think about the tariffs with steel and aluminum and sort of these home building projects. Each of them have different exposure when it comes to the tariffs, but in general, they are focused on a consumer that wants to spend more. And the tariffs in general, we know, are creating negative consumer sentiment. So I imagine maybe the conversation was a little bit more flavorful than their official readout.
We used to say when I worked at Alliance Bernstein that volatility is your friend, but with friends like these. Kelly, thank you very much, as always. I appreciate having you in studio.